Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I have Joel Ross, the Ross Rant, CEO of Citadel Realty Advisors, on the show with me today. Joel, welcome back to the show.
Good afternoon.
All right, I'm glad you're here. I really enjoy these conversations with you. The first thing that you wanted to talk about today was the Fed, right?
Correct.
Okay. What's going on from your...
It's kind of interesting. After Powell made his speech and everybody got all excited, the number of people sat back and reread it. And it's unclear what he really said. And the reason I say that, and other people say that, is he said we're getting close to the range of neutrality, not neutrality. The range of neutrality is 2.5% to 3.5%. So maybe he meant it the way we all originally took it, or maybe what he's doing is trying to deflect Trump, the housing industry, the auto industry, Wall Street, and everybody else who's been saying you need to not do 3 next year. Now, we don't know. But one would think that if all these projections of a slowdown next year, which are probably correct, and a potential recession in 2020, which who knows, but if those are somewhat legitimate, it doesn't seem right that the Fed would keep raising all through 2019, headed to a recession in 2020, if they believe there's going to be that kind of slowdown in 2020. Why would they do that? So my own thought is that maybe they'll pause in March or maybe they'll pause in June, but maybe it really is data dependent and they're not as hawkish as originally we all thought back in October when Powell made his original speech. Not clear.
No, I agree with you. But it's been my experience with anything that comes out, any communication that comes out of the Fed has always been guarded. It's always been, they've always got a back door on it. My favorite guy for doing this was Greenspan. I mean, he talked in circles so many times that the only thing I ever got out of his entire tenure was irrational exuberance.
Right. So, I don't think anybody ever understood the gibberish Greenspan would speak.
Oh, here I thought it was just me. Okay. All right. So I get that. The question that I'd like to ask you, because you've been doing this a little bit longer than I have, probably at least a decade. And the question that I've got here is this. Let's say they don't raise because they're concerned about a slowdown. The next question that people are wondering about is, would that open up a greater move for inflation and giving them another problem to worry about? What is your take on that?
I don't really think so. And the reason I say that is, first of all, oil is still at $50 today. Yeah. Now, where oil is going to be 6 or 9 months from now, who knows? Quite clearly, Trump has some leverage on the Saudis now. Plus, fracking is pumping out practically 12 million barrels a day, and that could be increased. So it's unlikely oil is going to go much over 55 or maybe 60 at worst. But at 50 or to $55, that's a big help to keeping inflation down. Plus, Walmart is become a very real competitor to Amazon now. I've been told by economists who have studied this that Amazon is worth 0.5 point less in inflation than we otherwise would have had. So if Walmart is really pushing on prices and Amazon is competing, and now other people, Target and other people, are competing that way, that's somewhat of a leveler on inflation. And it's not at all clear to me that wages are going to go through the roof, since they haven't so far. And there still seems to be some people around, I guess, who might come back into the workforce, although every friend of mine who runs a company said they can't find anybody who's qualified, and that seems to be pretty universal. So how fast does labor costs go up, and how widespread is that? Not clear. But I think that's probably the biggest issue, is labor.
Right. Well, okay, I'll go with you on that. What about the stock markets?
Ask me the question after Xi and Trump have dinner tomorrow. I mean, the indications, I was watching the news about a half an hour ago. They're all at the G20 now. And the U.S., Lighthizer, and some others are coming out with positive kinds of comments today, this afternoon. But who knows? I mean, I expect they're going to announce some sort of face-saving sorts of things, and we're going to not raise the tariffs in January, and China has agreed to this or that sort of thing, and we're going to have more conversations. But I don't know, maybe they're going to surprise us. There's been a lot going on behind the scenes with Kudlow and Lighthizer and the others. And they're not talking about the weather for the last week or so that they've been apparently meeting from news reports. So I don't know. It's impossible to know. It's hard to believe that China is going to do a dramatic change in the whole way they've been doing business for decades, which is keeping everybody out, stealing technology, et cetera, cheating on everything that WTO rules stand for. I can't believe Xi is going to say, okay, we give up. We're going to change today. But maybe they'll make some adjustments and some concessions. I think if it looks like China is willing to do something and the tariffs are not going into effect in January, the stock market will go up 1,000 points or more. If it ends up that nothing's really accomplished, the stock market could go down 1,000 points. I don't know.
Okay, we're just got to wait and see what happens with that.
Yeah.
What about Brexit? Go ahead. Do you want to say something else on that?
Yeah, I mean, Brexit, which is the next thing we were going to talk about. I don't know a lot about the deal, but from what I read about it, it sounds terrible. Mm-hmm. It sounds like she gave away the store, and they didn't get what they really wanted, which was complete freedom from the EU rules and control. And in fact, they're going to be under EU control for 3 more years or more, and nothing to say about it. So it seems like it's a worse deal. So I'm guessing it's not going to get through Parliament the first time around. She's going to have to go back to the EU right around Christmas and try to renegotiate. The EU, of course, has said, we're not having any more negotiations, which is, they say that, but who knows? Right. Do they change the deal in January? Maybe. The EU has the problem of, if they really give her what Parliament wants, then Hungary, Poland, Italy will be in line right behind her, maybe. And so I don't know where it goes. I wouldn't be surprised if it's a hard Brexit, and I wouldn't be surprised if that goes not as badly as the what you hear from people in England who just want May's deal approved. I mean, they've been getting ready for this for 2 years. They're bringing in inventories of food and medical supplies and other things. The financial community has already set itself up just in case. So I'm not convinced, other than the stock market over there may tank for a couple of days, that hard Brexit necessarily be so terrible.
Yeah, we'll see how it plays out. What about consumer spending? What's your thoughts there?
Well, the recent report as of yesterday, the day before, was excellent. Consumer spending was up 0.6% in October. Everything I hear from people on the front lines in retail, et cetera, is very positive. The former CEO of Saks on TV a day or two ago was saying that one of the things that's happening is the retail industry, at least the ones who know what they're doing, have new algorithms where they're really able to track inventory carefully and adjust things. And so there's a lot less markdowns this year than there had been in the past because inventory is much better controlled and overnight delivery is now a reality. And so if sales are up quite a bit, which I expect they will be, and they can control inventory and control markdowns, my guess is that the retail industry is going to come out of this Christmas in really good shape with really good reports. And I think with what will probably be 3.6 or 3.5% unemployment, wages are up 3% this year, and they'll probably go up 3 or 3.5% next year. People are feeling secure in their jobs, and there's a very positive sentiment with consumers. I suspect we'll see a continuation of that, which would then be very good for the economy going into 2019, despite the fact that it will be a slower growth. But if the economy is growing at 8 to 10%, we used to think that would be, or earnings, I should say, not the economy.
Yeah.
Earnings are growing at 8 to 10%. We used to think that's really good. I think people got a little spoiled thinking 25% is what it's supposed to be. But 8 to 10% earnings growth would be really good. And if consumers keep spending, that's very viable. And provided the UK doesn't tank, and provided Italy and the EU work something out, and the EU stabilizes, which is a big if.
Yeah.
Because the other problem you have in the EU right now, Macron is like a 26 or 27% approval rating, and you got violent protests. So he's not really an effective leader. Merkel is sort of sidelined. And so nobody's really running the EU except some bureaucrats. Then you have Italy, and we don't know where Italy is going to come out. So to me, the EU has really serious leadership and political problems, which is going to be very disruptive for them in 2019, no matter what happens with Brexit. And so the EU economy probably is not going to grow much. The ECB has decided in January they're going to stop QE. The BOJ is going to stop QE January 1st. So all the liquidity that's being pumped into the system still is going to stop January 1st. That's going to have an effect on the stock market and other markets and economies. So yes, 2019 will be slower. I think the U.S. will still do well. And then it depends on the Fed, like we talked about.
Got it. Is there anything more on the inflation front you wanted to bring out? Because we did talk about that earlier.
I don't think so. I think, probably housing prices will stabilize around this level because they're probably at a level that things are not selling like they were. I know certainly around the New York area, housing is slowed down. And I think that's true in other markets around the country. And so prices will probably stabilize in housing, which is good. If interest rates on mortgages don't go up too much more, you and I remember when 8% mortgages were great, normal. I remember 12% mortgages.
Right.
So 4.8% to me was unheard of back when you and I were buying houses. So I don't think it's the mortgage rate. I think it's house prices went up a lot. There's student loan issues with new buyers. Maybe all that starts to level out next year. Hard to know.
Got it. Now, there was something that you brought up the other day about what's going on in the universities. Did you want to talk about that now, or you want to save that for another?
Well, I'll bring it up and we can talk about it in more depth the next time. But I don't know how aware people are you hear stuff a little bit, but the mainstream media doesn't make an issue of it. But on many, many major campuses around the country and minor campuses, there's no freedom of speech. And what happens is there are speech codes, and when students come in August or September, there are orientation classes where you're told you have to not say anything that might be offensive, whatever that means. And professors tend to be very, very liberal on most of these campuses today.
Right.
And so and this is not a political statement, this is a fact. There is an indoctrination of students today that you can't say anything that might in any way offend anybody because nobody's allowed to get offended. And this kind of goes back to in high schools now in many parts of the country, you get a trophy just for participating, and competition is out the door. And so we're creating a group of people who are coming into the workplace and eventually into leadership positions who have a very, very different approach to the world than we do. And you see this week at Google, where they're thinking of, not the company, but some of the workers are thinking of staging a strike. Think about that, because the management isn't doing what they want them to do. Now, when does the employees tell management what business strategy should be, what products they should make? But that's what's going on at Google. And if you recall, there was a young man who raised an issue as a discussion point about why there's less women engineers, and that women are maybe made up differently in the way they think about things. They're better at some things and not better at other things. It was a legitimate question. And he got fired because it didn't fit the mantra. And this is the kind of thing that's going on that's very, very dangerous. Today, there was a news item which said that there were people at Google after the election who talked about cutting out conservative news programs and newsletters from search engines on Google so that they could make people only see what they wanted them to see, which kind of comes out of this campus thing of you can only think what we think you should think. You can't have speakers we don't approve of, and we will shout down or verbally or physically in some cases attack speakers that we don't like, and they get disinvited or not allowed to speak. And this is widespread, and it's extremely dangerous to the country, what's going on. University of Chicago, the president of the University of Chicago did it differently. He said, we have free speech here, and if you don't like it, go somewhere else.
Okay, point made.
And that's what's needed. And there is a organization, the American Council of Trustees, which has thousands of trustees attached or as members. They're working hard on this. And there was a case or a situation at University of Pennsylvania Law School, and it's the Amy Wax case that everybody should look at. Amy Wax is a very long time experienced, very highly thought of professor at Penn Law. She had the audacity to raise a question about affirmative action. And what she said was, in her experience, which is many years of teaching at Penn Law, that black students rarely get into the top half of the class. And that's because a lot of them are allowed in on affirmative action, and their scores on the LSATs don't measure up to what Penn Law used to require. And so they tried to fire her. Now, Paul Levy, who was chairman of the Board of Trustees, raised a huge issue about it and did an op-ed in the Wall Street Journal. This goes back a couple of months. And they didn't fire Amy but they've given her one little tiny class. And this is censorship, and this is ridiculous. And Amy has told me that the other professors now kind of ignore her. And this is a professor who was highly thought of for years at the school, but now she's become toxic. This is the kind of thing that's going on, and it's really bad.
Point made. All right, Joel, I really appreciate the time you spent with me today. I look forward to our next conversation. We can drill down more into this because there was some other things that we were going to talk about. We'll save that for another time on this anti-Semitism that seems to be swooping through the university system. That's, I think, if I saw it correctly, is really based in Germany and moving throughout our education system here.
I think that's right.
Let's talk about that next time. But thanks for being on the show with me today. I look forward to our next conversation.
Thank you.
You're welcome. You've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.